Hey everyone, and welcome back to another episode of Crypto Invest. I hope you had a great weekend, and it has been a crazy week in cryptocurrencies and market. And today I want to focus on Bitcoin versus Bitcoin Cash. There has been quite a bit of movement in Bitcoin Cash price, and there have been a lot of news about Bitcoin Cash. So I do want to make this video to explain to you what are the differences between Bitcoin and Bitcoin Cash. Hopefully it can help you make a better investment decisions, and hopefully that this video will help address some of the questions that you may have. So let's get into it. Now first up, we're gonna talk about inception date, which is also known as the first block or the Genesis block. So Bitcoin, the inception date recorded was actually January 3rd, 2009. And with Bitcoin Cash, it's actually August 1st, 2017. So, which is a little more than 3 months ago. Today is November 12th, 2017. And Bitcoin Cash was created because of the split from the original Bitcoin chain. So, Bitcoin went to a hard fork and the chain split up into Bitcoin Cash and the current version of Bitcoin. I will go into that a little more in a little bit. Now, the goal of Bitcoin and Bitcoin Cash are similar. The goal is still to be the peer-to-peer electronic cash. At least on the website, I know this is a condensed version, but on a website of Bitcoin and Bitcoin Cash, it is more or less identical. The maximum amount of Bitcoin is going to be 21 millions. It's going to be the same amount for Bitcoin Cash, which is 21 millions as well. Now, as far as mining, they are similar as well. By the way, anything in blue means they are similar. So, for mining, and Bitcoin Cash are using the ASIC miner, which is the specialized hardware mining, and they both use the SHA-256 to mine for the coins. Next, we have block size, and this is in red because it is different. So this is where the similar end for Bitcoin and Bitcoin Cash from the major points. Now, next, the major differences between Bitcoin and Bitcoin Cash is the block size. So the block size for Bitcoin is 1 megabyte, and the block size for Bitcoin Cash was 8 megabyte. And I will certainly go into a little more as to why this is the major differences, and this is what caused the chain split back in August. And then the second major differences between Bitcoin and Bitcoin Cash is that Bitcoin is SegWit activated, also known as the segregated witness, and I can go into this a little more in the next couple slides. And for Bitcoin Cash, SegWit was not activated. That was the whole point of Bitcoin Cash, is to create another version of Bitcoin that have no SegWit and 8 megabyte. And the original Bitcoin activated SegWit with 1 megabyte block size. And let me go into a little more details shortly about why these differences happen. And the difficulty adjustments for Bitcoin, it is about 2 weeks. So it takes the network about 2 weeks to adjust up or down, which would make the network less difficult or more difficult to mine for Bitcoin if there are not enough hash rates or there are too many hash rates. For Bitcoin Cash, it's actually quite different. It's operating on something called the emergency difficulty adjustment. It's actually every 6 blocks. If 6 blocks are not formed within 12 hours, the difficulty level gonna decrease by 20%. So let me repeat that. If the network could not produce 6 blocks within 12 hours, the difficulty level gonna reduce by 20%. So a lot more quicker and frequently compared to the traditional Bitcoin, which is about 2 weeks. Now this actually creates quite a bit of a situation that we are in currently, and I will go into this as well. So don't worry about that. This is the high level. These are the key similarity and differences between Bitcoin and Bitcoin Cash. And in the next few slides, I will go into more details onto why these differences exist and why they require for the different network. So let me go into that. So let me first talk about Bitcoin. So the Bitcoin network for the last year and a half roughly has been experiencing a lot of slowness because there are more and more transactions on the network, more and more people using Bitcoin either for trading or for transactioning or sending back and forth between wallet, that the network couldn't handle it because there is a 1 megabyte block size hard coded into the network, and simply put, the network wasn't equipped to handle this many transactions, and because of that, the transaction fee on the Bitcoin network has been rising steadily since I would say July 2016 all the way until the current time, which is November 2017, and it skyrocketed from barely anything, which is less than $1 back in 2016 at the beginning, all the way to a high at $9 or $10 based on the current volume and the current transaction. So what this means is that if you are not willing to pay the higher fee, if you only willing to pay the lower fee, say the network average fee currently is at $6, and you only willing to pay $2, then you may have to wait for quite a while to get confirmation, because the miner will choose the transaction with the highest fee, and they will confirm that first before they go into the lower fee transaction. So this has become quite an issue, and it's caused a lot of delay in the network. So the solution are twofold. There are two separate type of proposal at the time, and one proposal is in favor of block size. So they're basically saying that, as simple as this sounds, if the block size 1 megabyte is the bottleneck of this issue, then why not to increase the block size? Make it twice as big, make it 8 times as big. And that's exactly what Bitcoin Cash did, is to increase the block size to 8 megabyte. On the other hand, they want to implement a more long-term solution, in my opinion, is the SegWit solution, the segregated witness, is that they're gonna make a change on how the network do things in order to have a long-lasting, scalable solution. So the two sides really go head and head. And finally, long story short, there's a lot going on with the SegWit situation. But on August 1st, SegWit got implemented because of the New York agreement. Which, if you want to know more about this, I have a few videos about SegWit 2x, which now is canceled. But that's to explain to you what happened here. So, long story short, SegWit got activated. So, the block size remained 1 megabyte, but SegWit is activated. On the block size, a group of people, they got together. They don't like SegWit. They don't believe in SegWit. They believe in bigger block size. So they create another chain of Bitcoin. And now that chain of Bitcoin is called Bitcoin Cash, which have 8 megabyte block size. So that's a pretty high level summary of what's going on. So let's get into a little more information. Now, let me explain to you what SegWit is for those who don't know what SegWit is. So think about, this is the one block for Bitcoin. One block with 1 megabyte for the current Bitcoin version. And what this block does is contain transaction inside a block for the miner to verify. Okay? Somewhere in the block there is room for signatures. So each transaction will be signed electronically. So there's a room to store those electronic signatures. In order for the network to be able to have more transaction in the same amount of block, they have to go ahead and move the signature to a separate block, maybe around 0.3 megabytes or so, but it's not part of the 1 megabyte transaction. And now you have more room to put more transaction in here, and that's the solution that the current Bitcoin is implementing. It's called SegWit. Now, on the other hand, the Bitcoin Cash, they don't believe in this situation here because they're thinking that removing the signature is not a good thing, and also they don't believe that this is follow Satoshi's original vision. So they think that improve the block size is the solution. So what they did is they broke apart. They have their own chain split from original Bitcoin, and what they did with this chain is that they increased the block size to 8 megabyte transaction. The signature is still going to be contained in the same location, but there's more room to store transaction, hence more transactions can be handled, and that's how they decide to resolve the scalability issue with Bitcoin. Now, the SegWit is the first steps for the current Bitcoin version. They are working on Lightning Network, which is an off-chain solution that can help Bitcoin transacts, on par with Visa and Masters, and that's going to be a lot more sustainable in their mind. In the the current Bitcoin version, the SegWit version, that's way more sustainable because on the block size, 1 meg to 8 meg block size, yeah, it's working now, but eventually 8 megabyte won't be enough. You will need 9 megabyte. You will need 10 megabyte. But even then, they don't believe the SegWit Bitcoin, the current Bitcoin, don't believe that even at 10 megabyte or even more than that is enough to compete with Visa. You need a different scalable solution. So that's what they're working on. But SegWit is the prerequisite for the Lightning Network for the current Bitcoin version. And also, Bitcoin can potentially implement atomic swap, which is what Litecoin is testing at the moment, which means you can swap between different chains, so Bitcoin for Litecoin without going on to an exchange. Now, on the other side, the Bitcoin Cash can adjust the block size up to 16 meg, so they can double the current megabyte without any hard fork. But anything more than this will require them to hard fork. So they do have some room to scale from this 8 megabyte, which currently not a lot of blocks are full at the moment. Alright, so let's take a look at this for a second. So this is the last 3 months Bitcoin difficulty chart. You can see that Bitcoin difficulty has been going up for the most part and is fairly predictable in terms of the hash power and how difficult the network is. Take a look at Bitcoin Cash difficulty chart in the same period. You will see that the difficulty level is up and down very violently. I mean, this seesaw effect is happening, and this is because if you remember earlier on the second slide, we talked about the fact that Bitcoin Cash. Let me go back so you can see it. That seesaw that you saw there is because Bitcoin Cash adjusts every time there is not enough 6 blocks in the 12 hours. The network will adjust down 20% and vice versa. Therefore, you have this situation here where you have a seesaw effect here because when the network cannot form 6 blocks in 12 hours, the difficulty level drop. And the reason why, because there are not enough hash power to do so. And because of that, it becomes really easy to mine. So all the miners who have Bitcoin, currently they can switch over and mine Bitcoin Cash, because remember, they both use ASIC and SHA-256 to mine, because it's more profitable now because Bitcoin Cash is easier to mine. So therefore, they keep switching back and forth, whichever more profitable. And every time they switch back, the network become harder, and then it become easier because there's not enough hash power. Then they go back and mine it. And then the network become harder because there's so many people mining it, and then they switch back to Bitcoin, and then the network become easier again, and they switch back, and this game keep going back and forth, and it's actually not good for any network, but it's good for the miners at the moment. And this is actually quite an issue because, number one, the confirmation can be either really fast or really slow depending on how many people are mining it. And also the block rewards are really random and it cannot predict. Not like you can with Bitcoin Cash. You can easily predict the inflation of the network. Another word for that is how much reward are given out in a certain period. But I will go over this a little more. So, like I say, it's gonna produce inconsistent confirmation time and unpredictable coins production. Now, there is a hard fork scheduled for tomorrow, November 13, 2017, And that hard fork for Bitcoin Cash is aimed to fix this very issue here that we just discussed, to smooth out this lie here. So it become a lot more easier to predict in terms of coin production and confirmation time. Now, this particular issue here, I always compare it to, like, loosely traffic. So you think about, when you have traffic, there are multiple ways to fix this, and one way potentially is to make better traffic laws. I mean, maybe you have more carpool lanes where car with multiple people can be in this lane only, or you can have on-ramp restriction where you can have a stoplight somewhere here to reduce the amount of car that can get on the freeway. Another solution is to expand the freeway to get more lanes. More lanes mean you can do more cars. So I think this is a loose, but it's a good example of what happened with Bitcoin at the moment, because there's so many transactions. You can either increase the megabytes per block, or you can have SegWit, which is a better solution in terms of the rules of the network. Alright, so let's talk about the benefits of Bitcoin and the benefit of Bitcoin Cash. And if you have been with the channel for a while, I come from the investor mindset. I don't really participate in any political. I don't really have a strong feeling for either of them. I have, I invest in both because I like diversification. So let's go into this. So Bitcoin have a little bit longer list. So with Bitcoin, you do have the brand recognition. Everyone knows Bitcoin. Those who know cryptocurrencies definitely know what Bitcoin is, and they don't necessarily know Ethereum or Bitcoin Cash. So the brand recognition is huge in Bitcoin. Now there's a network effects of Bitcoin because Bitcoin been around a lot longer than Bitcoin Cash and other cryptocurrencies. Therefore, they do have quite a bit of people that know about them, that uses them. So the network effects are quite huge. It is the oldest and the longest blockchains, and it is the most secure blockchain. And Bitcoin blockchain has been around for 9 years, and it has survived a lot of attack from DDoS, from a lot of different hackers trying to hack it, and it still survived into today. So it is the longest and the most secure blockchain. This is very important. It has a very large and liquid market. Yes, you can say that Ethereum, you can say Bitcoin Cash, you can say Ripple, also very liquid, which is true. But large market, Bitcoin market cap currently is above 90 billions, which is 3 times more than Ethereum, and definitely 3 times more than Bitcoin Cash. So that is important for institutional investors if they're willing to come in with a lot of money. This market, Bitcoin markets, will be equipped to absorb that kind of money, whereas Bitcoin Cash may not be. Now there are more merchants accept Bitcoin, so that is the case at the moment where when merchants do accept cryptocurrencies, a lot of time they only accept Bitcoin and Bitcoin only. It is a very effective store of values. I don't have to speak much about it. Look at the Bitcoin price from 6 months ago until today. Look at the Bitcoin price from a year ago to today, etc. It may be able to get the Lightning Network working soon, hopefully. So the Lightning Network will be able to let Bitcoin scale to the level that it can potentially compete with Visa and MasterCard. So that's the benefit. Now, on Bitcoin Cash, the transactions are faster, no doubt about that. We talked about that just now, the fact that Bitcoin Cash does have bigger block size, meaning it can handle more transactions. Bitcoin, until we have a Lightning Network, it's not gonna be able to produce the same level of transaction that Bitcoin Cash in terms of how quick it will be. Because with SegWit, we haven't seen much of an improvement yet in terms of transaction speed. But in Bitcoin Cash, it definitely is faster. The consensus in Bitcoin Cash seems to be a lot more quicker and a lot less drama. So as everyone know that the debate on Bitcoin scaling has been going on for a year and a half now before they finally decide on the New York agreement. But then the SEC with 2x kind of fell through. So consensus seems to be hard to reach on the original Bitcoin network, but it seems to be a little bit easier on the Bitcoin Cash network. Transactions are cheaper. We just talked about this. Transactions are so much more cheaper on Bitcoin Cash and Bitcoin. And Bitcoin Cash does have the adjustable block size up to 16 megabytes. And then they have your hard fork after that. So let's go to the critics. So the critics of Bitcoin, including the fact that the transactions are slow. We just talked about that. It is way more expensive. We just saw the charge on how much it costs to send Bitcoin at the moment because of the network congestion. It is very difficult to reach consensus at this point. We just talked about that. And it is controlled by a few entities, mainly core. That's the critics. I mean, these are the information that I gather on from different people, and also my opinion as well. On the Bitcoin Cash, the critics are the bigger block size is a temporary solution. So eventually, just like my example with traffic, eventually the more lanes you add, the more traffic you will get. The bigger the block size, the more transaction gonna be able to fill up. But eventually, you will have to constantly increase your block size, and it's definitely a temporary solution. It's not permanent. And the bigger block size can be cancerous. So what this means is that remember that if you are running a node for Bitcoin, you are essentially have to download the entire transaction history of Bitcoin Cash. If you're running a node for Bitcoin Cash, and if the transaction history is really large, so for example, if it is a 8 megabyte or 16 megabyte, and you continue to download that transaction history for since the inception of Bitcoin, that will be really large, and it may not be able to fit on your hardware, and it's gonna basically price you out of the market in terms of being able to run the full node on the network. So then the larger block size will eventually lead to the fact that only a few people have the ability to store a large amount of data to run nodes on a network, would make the network more centralized. And surprisingly enough, controlled by a few entities are the critics on both sides. On the other side, they think that the miners are basically the main control of Bitcoin Cash. So I hope that this video helped explain some of the differences between the two, Bitcoin and Bitcoin Cash. I hope you learned something from this video, and if you find that it is helpful, please hit the like button and subscribe to the channel. I do video almost daily on the topic of cryptocurrencies. And with that, thank you again, and I will talk to you soon. Bye bye.